XRP whales accumulate, can price recover now? On-chain data shows the XRP whales have been sharply accumulating recently, something that can help the price recover. XRP whales have continued to expand their holdings recently according to data from the on-chain analytics firm Sentiment. The largest of the XRP investors have been buying in recent days. The relevant indicator here is the supply distribution, which tells us about the total amount of the asset that each holder group in the market is carrying in their combined wallets right now. The addresses or investors are divided into these groups based on the total number of coins that they are currently holding. The 10 to 100 coins cohort, for instance, includes all holders who own at least 10 and at most 100 XRP. In the context of the current discussion, two such groups are of interest: 10 million to 100 million coins and 100 million to 1 billion coins. The combined range of these groups has a lower bound of $5.22 million at the current exchange rate, while the upper bound converts to $522 million. This means that the members of both these groups are the whale entities, with the latter cohort naturally carrying the largest of holders even among these humongous investors. Now here is a chart that shows the trend in the XRP supply distribution for both of these whale groups over the last few months. As displayed in the above graph, the XRP supply distribution for the smaller of the two cohorts, that is, the 10 million to 100 million coins group, has been rising for a while now. This means that these whales have only continued to buy more as the asset's price has observed an extended drawdown. This behavior hasn't changed with the latest sharp plunge in the cryptocurrency either, as the metric has now risen toward the 5.1 billion mark. The largest of whales, 100 million coins to 1 billion coins, on the other hand, started to actively dump their coins not too long after the coin hit its top in July. They continued their selling until the recent crash, but following it, they have changed their tune and have participated in some pretty significant accumulation. This is naturally a positive sign for the cryptocurrency, as it means that these humongous whales believe that the current low should prove to be a profitable buying point. With this accumulation spree, this cohort as a whole now holds an 11 billion token stack. This means that these two whale cohorts combined now carry around 16.1 billion coins of the asset, worth around $8.4 billion. It's uncertain whether XRP would recover anytime soon, but the buying from the whales is at least a sign that these humongous entities would be supportive of such a move if it happens. XRP price. At the time of writing, XRP is trading around 52 cents, down 17% in the last week. BNB consolidates losses below $220. What now? BNB breached the $220 psychological level but consolidated narrowly below it. Disclaimer: the information presented does not constitute financial investment, trading, or other types of advice and is solely the writer's opinion. BNB saw 3 daily sessions close below $220 since 17 August. Indecision amongst players, but funding rates were negative. Market indecision amongst Binance Coin, BNB, traders set the altcoin into range trading over the weekend 19 to 20 August. After dropping below $220 on 17th of August, BNB fluctuated between $213 to $220 over the weekend. Although a clear market direction could be forged from Monday 21st of August, a range-bound extension could be on the cards if the market players' indecision persists. Meanwhile, Bitcoin, BTC, shed over $3,000, about 10%, in a week. It dripped from $29,000 on 14th of August, Monday, but steadied near $26,000 at the time of writing. Is range extension on the cards? BNB's extended drop on Friday, 17th of August, cleared a crucial psychological level of $220. The level stopped the June dump and was a bull's rescue during the December 2022 slump. But it failed to hold up the recent sell pressure. At the time of publication, the Relative Strength Index, RSI, was flat in the oversold territory. It demonstrated the recent intense selling pressure with no signs of price reversal. Similarly, the on-balance volume, OBV, dipped and moved sideways. Demand declined and stagnated. These readings reinforce a potential range-bound extension between $213 to $220 in the next few days. However, a bearish breakout could expose BNB to grace or crack the $200 mark. Alternatively, a bullish breakout must mount above $224 to tip bulls to target $230. BNB's negative funding rates persist. BNB's funding rates have been worryingly negative for a while now. Given the $220 psychological support breach, the negative funding rates reinforce a bearish bias in the derivatives market. Notably, the CVD cumulative volume delta declined between 15 to 17 August, meaning sellers had more market control over the period. But the flat movement from 18 August indicates no players had absolute leverage. It reinforces the neutral and range-bound extension thesis.